Hello and welcome to Panther Financial Services. This is Pranav Patil. Today we will discuss what is sovereign gold bond, how it works, where you can buy these bonds, what are the returns you get on these bonds, who should invest into these bonds, then benefit of these bonds. All these details we will try to understand in a very simple language. So let's start with the what is sovereign gold bond. The word sovereign is like it is nothing but the government. Gold bond means the benchmark is gold and the bond is bond. So the bond which is issued by the RBI and guaranteed by the government of India and the benchmark is a gold is called as a sovereign gold bond. In a very simple manner I made it. Or in other language, the bond which are issued by the government RBI is called as a the benchmark is gold is called as a sovereign gold bond. Now, what are the returns we get into these bonds? Every year, 5 to 6 times, or sometimes 4 to 6 times every year, government RBI comes into market and raise money via these bonds. So basically, they sell these bonds every year 4 to 6 times. Now you don't need every time you have to apply at the primary level, primary market. You can buy it into the secondary market as well, like you buy into like you buy stocks as well, similar fashion. Now what are the returns you get it? If you buy these bonds, you get a 2.5% returns every year interest on these bonds. You get 2.5% interest on every year plus capital appreciation of the gold. Suppose today the gold is 5,000 per gram and 5 years down the line it became 8,000. So that 3,000 will be your capital gain and every year you will get 2.5% return interest on these bonds. Now this interest is taxable. If you are into bracket of 30 to 35% income tax bracket, then this 2.5%, the net return you get it every year is 1.62% every year plus capital appreciation, which is not taxable. Capital appreciation into these kind of bonds are not taxable. So there are two ways you get a return. One is the interest every year and second is a capital appreciation. This is all about the returns. Now assume it that in 2017 you bought this bond. The price of gold in 2017 was 2890 rupees. So I'll make it round figure, 2900 per gram. Today the gold rate is 5300. So the difference is 2410 rupees. If you calculate on a yearly basis, you got every year you got like 15% return, because there is a high level of capital appreciation happened in the last 5 years. Post COVID, the gold rate has gone up drastically. And this is the capital appreciation benefit you got it, which is not taxable. And second, every year you got 2.5% interest into your account, which is taxable. You have to pay the income tax on it. So if you are at the higher bracket of IT, then the net return you get it, net interest you get 1.62%. Then second, who should invest into these bonds? First is a consumer. Basically, the person who wanted to buy the gold, the person who wanted to buy the gold for a daughter's marriage perspective, or for a white jewelry perspective. Say 5 years down the line I wanted to make a some gold jewelry. I don't have a big amount with me right now, so every year I buy gold. Like even in the guru this at the time of Diwali or Guru Pushamrut, many people buy gold, right? So similar fashion you can buy same gold in a digital form. That is called as a consume. For a consumer perspective, to consume, you wanted to buy. So you can buy these gold in a digital form. How you can buy it, these bonds? There are three ways you can buy it. One is a post office, second is a bank, and third one is a stockbroker. The broker stockbroking is the very easiest way to buy these bonds. The reason, because if you go to post office, you'll have to complete the KYC. If you go to the bank, there will be a physical form, you'll have to sign it, then you'll have to apply, etc., etc. But in the form, if you buy it in your demat account via stockbroker, you can sell at any time. Suppose if you buy today, if you sell it, say in the next month, the gold rate gone up, you can sell it, but you will not get the tax benefit. There is a lock-in period of 5 years in these bonds. The maturity comes with the 8 years. So the first, the who should invest into this bond? The first person is who wanted to consume the gold, basically who wanted to buy the gold. That fellow can buy these bonds. Second, for an investment perspective, there are people who have a mentality, okay, I don't wanted to invest into stock, I don't wanted to invest into FD, I don't wanted to invest into index ETFs, I don't wanted to invest anywhere, I firmly believe on the gold is the safer side. That's the reason they buy gold. These kind of people, or this kind of mentality, those who have, they can buy this kind of gold into their demat account. For an investment perspective, you have the money, you can invest it. Now this bond doesn't come with a SIP, like every month you can do a SIP, or every year you can, no, you have to lump sum invest it. When the issue comes, 4 to 6 times every year issue comes, you can apply it via stockbroker and you can get those bonds into your demat account. Now how much you can invest? Minimum investment is 1 gram, that is current rate, if you look at 5200. Maximum you can invest 4 kg, somewhere around 2 crore plus. So this is the bracket, 5000 to 2000 crore, here and there some amount. So this is the bracket you can invest, minimum and the maximum. Now the third person who can buy it, the trader, basically the trader who has a very big amount with them. Suppose there are big companies who have the cash in hand, they don't want to invest into stock market, or they don't want to invest into any other FD or something, and they feel that the gold rate is down and we can take a benefit for a 6 months or 1 year or 2 years perspective. These people can buy in a bulk quantity via this exchange or via trading account. You can buy it, you can sell it at any time. It is as simple as equity buying or shares buying. How you see the bid quantity and sell quantity uh, on the system for a particular stock, similar way you can find this buyers and sellers quantity in the for these bonds as well. So three type of people can invest into these bond. One is consumer, second is investors, and third one is a trader. Now what are the benefits you get it? First benefit is safety, purity, and less costly. Safety is because, say if you buy a gold, you need to have a storage, right? If you keep that big gold, suppose if you buy a 500-gram gold or 100-gram gold or 1 kg gold, you will storage it in your home or your locker. There could be chances, somebody do something mess with that gold, but here nothing will happen because it is into your demat account. Purity means if you go to jeweler and if you ask for a 999 gold or 24 karat gold, we call it, and he gave you say 20 karat gold, there could be chances. I'm saying purity. Here you will get the absolute purity. There is no fudging into this. Third one is a less costly. When you buy a gold, physical gold, you have to pay the taxes, and if you buy the jewelry, the costing goes like a making charge and everything, somewhere around 12 to 20%, 1 to dash 20, 12 to 20% costing goes for making charges and some other material also they mix it. So this is the first benefit you get it. Second is no taxation and no default risk. No taxation because you don't need to pay GST on it. If you buy a 1 gram gold via jeweler, you have to pay the GST, you have to pay the making charge, but here you don't have to pay any kind of taxes like this. Default risk, it won't be default because it is backed by government of India. That's the reason it has a very less default risk. I use the word less default because currently we have seen the Sri Lankan government case as well. That's the reason I mentioned those words. Now, the this bonds minimum you have to keep it for a 5 years perspective. The maturity comes for a 8 years for these bonds. If you wanted to withdraw before that, you can withdraw it. You'll have to pay the taxes if you withdraw money. And the fourth benefit is you can take a loan as well. Like you have a physical gold, if you wanted to money, you go to jeweler, you take a loan on that. Similar way, you can take a loan via banks on these bonds as well, or via stock broker as well. The last benefit is these bonds are tradable on the exchange. It is into dematerialized form. So these are the benefit you got it. You get into this kind of investment or the gold bond. Now we have seen couple of points. One is what is sovereign gold bond. Second, we have seen who issues this, what is the who has who gives the guarantee of this bond. Third, we have seen who should invest it, like consumer, investor and trader. Then we got the benefit like safety, purity, less costly, taxation perspective, or you can take a loan which are, and the bonds are tradable on the exchange. And we have also seen the returns, what are the returns you get into these kinds of bond. All these details we have discussed. Hope I have tried to make it in a very simple word. Hope you enjoyed this discussion. If you have any question, any doubt, you can mention in the comment box, or you can WhatsApp me anytime. I'll be glad to answer those. Thank you for your time. Have a great day ahead. Thank you.